Good afternoon, Richard.
Hi.
So you've just come fresh off the stage from moderating a panel session earlier on HFT and its impact on the new execution landscape.
Yep.
Quite a heated debate in many ways, but also quite a lot of agreement. What were some of the big topics coming out of it?
Yeah, heated. I think some people thought it could have been even hotter, to be honest, because there are still so many open issues relating to high-frequency trading and its effect on market structure. To me, I think the one aspect on which all the participants seem to genuinely agree was the need for solid data. There's a genuine concern that regulators and others may be making decisions based on emotion, politics, misinformation, statistics that really don't represent the market in the way that it operates. And the struggle that the industry appears to be going through in order to collate the data that's needed for people to make rational decisions is really quite surprising.
So does this perhaps lead into the debate on the consolidated tape?
I think the consolidated tape is somewhat easier. I used to run Ex-Instinet and we built a consolidated tape that we used internally. And I think Mark Helmsley's points were on the ball this morning. I mean, he made it very clear that not only Ex-Instinet but other firms can pull together a consolidated tape. The lack of standards is not a barrier. The barrier is you simply cannot distribute that consolidated tape to end customers because you have to charge them amounts that simply don't make it economical. That goes back to exchange charging for data. So I think that's a very different issue from the kind of issue that faces regulators when they're trying to amass all activity in the markets to try and assess what's happening, who's really providing liquidity, whether any market abuse is really occurring or not.
So how do you think then it is affecting people's strategies in I suppose, the real world as it is right now?
Well, I don't think it does affect their strategies. Every day the traders here, buy side and sell side, they have to stump up to their desks and they have to trade in markets that are in front of them. Their times are lean. And when times are lean, that means the ability to spend time and spend money on what sometimes appear to be luxuries like lobbying regulators, perhaps even educating regulators. That's difficult. It's difficult for people to do. So on a day-to-day basis, people just have to turn up and get on with the job and operate in the markets precisely as they are.
But you say that, but to some degree, that it does seem like the regulations that they want to bring in over a consolidated tape are almost designed to be a threat. If you don't sort it out for yourselves, we're going to do it for you. And from what you're saying, that could be crippling because they're going to demand price cuts that you're saying are unsustainable.
Well, price cuts are going to be unsustainable when it comes to market data coming from exchanges. Now, I think the point that Michelle Price from eFinancial News made about the contribution that market data makes to exchange revenue lines, because that is very, very, very significant. We heard one of the exchange representatives talk about prices probably increasing. I mean, I find that unfathomable in this kind of environment. So I got the impression, I must say, from this morning's session that the regulators don't understand that it's actually not a lack of standards or a technological issue putting together a consolidated tape. It's the simple fact that it cannot be delivered to end customers because it would be so expensive.
So, but is there then a solution that is viable for all parties, or do you think we're now beyond that point? There's simply too much data to consolidate at a reasonable price?
There's not too much.
Unquote.
There's not. If we're talking about a post-trade consolidated tape, there isn't too much data. What regulators, as some suggested in the audience, what regulators may have to do is look at exchange pricing. Uncomfortable as that may seem, but the exchanges still have, I think it was referred to of a legacy monopoly over this market data. And that is what needs to be addressed. It's not a question of the industry wanting or being willing to put together a consolidated post-trade tape. It's simply a question of being able to onward deliver it to clients. Exchange pricing is a barrier.
But do you think that sort of pseudo-monopoly is going to dissolve somewhat now that we're seeing a lot more fragmentation, a lot more trading styles coming through, that it's actually going to make it harder for them to justify those costs when just as many other players will have data for sale?
You may get that. You could get competitive pressure from the likes of Bats and Chi-X really starting to compete on pricing market data. On the other hand, it does seem reasonable to assume that some of the national exchanges will continue to have a dominant market share or a significant market share, such that you could not really put together a tape that didn't include their business. So whilst you need to include their business, you will need to include their charges and pass them on to the clients. Same problem.
Now, also, given that we have quite a depressed market at the moment, volumes are down, and there's, as you rightly said, not a lot of spending going on in many ways. What opportunities actually are there right now?
I think there are some very big opportunities. I think one of the things that we need to be cognizant of is that the process of evolving market structures, the democratization of the markets, increased role of technology in trading, it's been revolutionary over the last 15, 20 years, but it's largely focused on that aspect of the market you might call a public limit order book, a visible book. And the majority of the buy-side clients in there, they don't have 100 shares, 200 shares to trade. They have trades that may be in size the equivalent of many days volume in that particular stock that they're trying to trade. And I have to say that the whole industry, I think, has been somewhat laggardly in trying to envisage and come up with new systematic ways of replicating what used to happen in the market in the way that block trades were constructed. I've got no doubt that technology can help in that particular area, but it appears to be an area that's been overlooked until now. The importance of equity markets is significant with the European economic crisis, with pension fund crises, and it really is important that regulators and others do get behind trying to improve the equity culture, trying to restore confidence in markets, and trying to enable the market structures that we have to accommodate those larger trades. If they don't, performance will suffer, the public's perception of the markets will continue to be weak, and Europe's capital markets will deteriorate and not serve the economies well. So it's not just an opportunity, I think it's a vitally important opportunity for the European economy.
So just finally, given that we do have quite a lot of access to a lot of the regulators through trade tech, if there's one message that you could give them, what would that be?
Well, I think it's so difficult. One single message, I just like to lock them in a room for a day and educate them on how the markets really work. And hopefully by the end of that day, try objectively to strip out the politicization of the regulatory debate, because I think it's fair to say, by and large, all the users in there, whether they're providers of technical trading software, whether they're fund managers, whether they're brokers, I think they all feel the same. I think they all feel that the regulators don't quite look at the market or understand the markets in the way that they need to in order to make rational decisions. And I think everyone fears that decisions may be made on the basis of emotion or politics, and that will not be good for anyone.